Hey traders and investors, it's Burger here. What we're going to talk about today is the banks once again. I always talk about how important the banks and in general the financial sector is for the broader stock market. So today, let's have a look at the banks with the S&P 500 once again tickling new all-time highs here. As I speak, the banks are actually taking a leading role in this, which is pretty much what they should be because they have been lagging. So if you take a look at, for example, the XLF, you can see from a technical point of view here, more of a nearer term type of view. You can see we are potentially still working in a, sort of the bears will point to this bear flag pattern, but the fact is, so far, unless this reverses very, very quickly, it more and more looks like this is going to be a situation where we have broken past lateral resistance, which by definition should then lead to a retest at the very least of the March highs. So that's both the bull and the bear case for my part so far. Until I see this reverse, this remains to be something that should be bought rather than sold into. So for example, let's go through a couple of tickets. Bank of America had up here just 1 second ago to me. A lot of these stocks look like good mean reversion trades. Remember, they haven't really done much in terms of bouncing even after last week's Thursday, Friday rally. But at least so far here on Monday morning, Bank of America's breaking away nicely. Might run into resistance here near 1550 at 200-day moving average, but otherwise should have room all the way up to about 16 bucks, which would fill this gap from April. So then you can kind of go through the list. Goldman Sachs, which has been showing some relative strength over the recent few recent days, coming into a pretty critical spot here. A lot of resistance coming up here near the 164, 165 area. If you can clear that, this stock will be a much easier buy. Morgan Stanley, and I look at some of the brokers, you can see this one has actually held this moving average. It is now, making a pretty healthy move here. Also nearing resistance, but if it can overcome this, certainly would be clear to go. You can look at things at Wells Fargo, make it a new all-time high, very constructive. JP Morgan also making a move today and coming into medium-term resistance, but after that has room into the high 50s pretty quickly. So you can see through this lens, understanding there's both a bull and a bear case. At the very least, I think at the moment there looks to be a pretty good chance of a mean reversion move, i.e. relative strength catch-up play in the banks, which would only help the broader market hold up and make this rally that we're seeing so far may become of better quality and potentially then last longer than a lot of the bears really still think it should be. So both the bull and the bear case here, but a lot of it depends on the financials. Watch the financials. As always, if you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. Good luck out there, and see you in the next video.